Wonderful. All right, welcome everyone to another Getting Ready for the Recovery webinar series by DeKalb County UNITES. My name is Cohen Barnes. I'm a small business owner here in DeKalb County. I own the company Sundog IT, and I'm also president of the DeKalb County Economic Development Corporation, which is one of the driving forces behind these webinars themselves. I did want to welcome everyone and just let you know that every Monday, Wednesday, and Friday, we have webinars at 2 p.m. that I encourage you all to come to. They're great. We've got a lot of guest speakers, different subject matter experts that come on, and it's just a wonderful way to get the information that we need during the COVID-19 crisis. So you may ask, what is DeKalb County UNITES? DeKalb County UNITES is a grassroots movement here in DeKalb County. It's made up of members from Northern Illinois University, from the nonprofit sector, government sector, as well as the private sector. Basically, it was just a bunch of people that came together when the COVID-19 crisis hit, and especially when shelter in place hit. And we knew that this was going to greatly impact the small business community. So we decided to come together and figure out any way we could to be able to make a positive impact on the small businesses in DeKalb County. So how have we done that? We've done that in multiple ways. One, DeKalbCountyUnites.com is a great resource for information about the PPP program or EIDL or other funding mechanisms that are out there. We've also done a whole calling campaign. So board members from the DeKalb County Economic Development Corporation got on the phone and called a lot of the large employers in our area and educated them on ways that they could spend money locally. Could be buying meals for all their staff as a thank you during this time, right? Could be buying gift cards, but it was also looking at budgets that were out there and figuring out ways that they could accelerate the spending process to drive dollars locally in our economy as soon as possible. And then the third thing we've accomplished is this whole webinar series. I think this is webinar 10 or 11, Courtney. I'm not even sure which one at this point, but all the webinars were recorded and they're posted on DeKalbCountyUnites.com. You can click on webinars at the top. You can see all the previous ones, as well as you can see the future ones that we're going to have this coming Wednesday and Friday. So without further ado, I'd love to welcome our panelists. Once again, we have Mark Kerman from Siepert and Company, a CPA firm here in town, and then Frank Roberts from the First National Bank of Omaha. So we've got a lender and we've got the CPA side of things, and we're here to really talk about the payroll protection program, maybe talk a little bit about EIDL and anything else that might come up. Some housekeeping, if you have questions, and boy, we're here to answer questions, right? This is not a slideshow, click through and present and just give you a bunch of information like drinking from a fire hose. We're here to ask any question whatsoever. You've got a banking expert, you've got a accounting expert, and then you've got Courtney and I. And hopefully between the four of us, we can get those questions answered. So just move your mouse down to the bottom of your screen and you're gonna see a little Q&A button. Go ahead and click on that, type in your question, and Courtney and I will field those and make sure we can get them in front of Mark and Frank for the answers that you all need. So if you didn't know, the PPP program reopened again today. So this is the second round of funding. The first round had $349 billion as part of the $2.2 trillion stimulus package. Those dollars are all gone. So they funded it with another round. And Frank, was it 250 or 300? I actually don't know. And I don't know if you know how much money's out there, but they just opened that back up and they're accepting applications once again. Is that correct, Frank?
It is. Excuse me, can you hear me?
Absolutely.
Okay. Yeah, so these numbers are going to be off just a little bit, no doubt, but it's about $330 billion of new PPP money. They came in with a couple of tweaks to the program that I think people need to be aware of. Number one is they've tried to segment some of the money that's available to different sized banks. I think the categories are less than 10 billion, 10 to 50 billion, and over 50 billion. And they've actually allocated money for those segments. That's one thing. Number two is they also, and I think this speaks to an important issue about making sure you're on it and you're at your bank's doorstep to the SBA. So what do I mean by that? They had approved batch applications for today, which simply means any bank that had greater than 15,000 applications could apply them not one by one, but by batch. And then, not surprisingly, after an outrage from yesterday or Saturday when that came out, the banking community rallied, and now that's been lowered from 15,000 applications down to 5,000. So hopefully that'll make it go a little bit faster. But as you would imagine, today the SBA website has been overrun with volume, so it has been down most of the day. And I think one of the important things to keep in mind is probably the biggest two issues that came out over the weekend are, one, the whole certification of need. But they've talked a lot about that, and if you go in and the frequently asked questions, kind of the politics around big corporations that may have access to capital markets, going out and getting $10 million of debt. Just make sure that you really think through your application where you certify that your business has been, the phrase is current economic uncertainty makes this loan request necessary to support the operations of the applicant. Just make sure when you answer that question, you can answer yes. I don't know whether there'll be repercussions for that down the road potentially, but that's a really important question to think about. And then the other thing is the Federal Reserve, I don't know when, but sometime soon will actually start publishing the names of those recipients of PPP money. And they'll be reporting the name of the borrower and the dollar amount that you got. There's some other ancillary stuff that surfaced over the weekend. So round two is open. There's going to be a huge number of applications that are at the doorstep of the SBA ready to roll. From what I understand today, the SBA web E-Tran has had challenges just because of the volume, and there's been a couple of tweaks to the program just as it relates to how the dollars get allocated and the publishing of recipients, and making sure that you can honestly answer the question that your company has been negatively impacted by the COVID-19 issue.
And Frank, I know everything is just based off of our knowledge, right? And none of us here are speaking with the authority of the SBA or the authority of the federal government in any way, shape, or form. But the question, like you just brought up a good one about checking the box that I have been adversely affected by the COVID-19 crisis. So that makes me, just by me checking that box, makes me eligible for the money. But I know I've actually been asked by some that, you know what, you could be, let's say a pizza delivery place where the only part of your business has been delivering food. And obviously when COVID-19 hit, most likely you're benefiting from this circumstance rather than being adversely affected. But the question that's come up is, in this case, if one of my drivers gets diagnosed or tested positive for COVID-19, and we all have to then quarantine, that shuts down my business completely. Now that could have happened, or that could happen. Any insight on there about people that might have checked it that were worried about the fact that this could definitely adversely impact them, as opposed to they were being adversely impacted when they filled out the application? There's a lot there, I know.
Yeah, there's a lot there, and I'm not going to answer that question.
All right, I don't blame you. I don't blame you. So part of what we've heard a lot about is there's just a lot of people that have applied. This is a safety measure. If you are awarded the money, it's a 1% interest on this money. And you could, if it turns out that by June 30th, that you actually greatly benefited by this crisis, you could return all that money. There is no penalty for prepayment whatsoever. So it's one of those that's going to be the individual decision of each individual business. What do you want to do? Do you want to apply or do you not? Whether you think you're going to be adversely affected or not. But the spirit of this 2.2 trillion and the 349 billion and then the second round of funding really is those that have been adversely affected. It's to help them through this process. Mark, you got any comments on any of that?
I think I'm going to expand on that one as well.
I love it. All right. So let's just go forward with the fact that COVID-19 crisis hits, the PPP program gets put in place, And there was also another program called the EIDL, which was another program with the SBA. So some of us, Sundog included, received PPP funding as well as EIDL funding. That just happened. Mark, maybe you can talk a little bit about the EIDL funding. That was $10,000 from the SBA. Its intent was it would be issued 72 hours after application. It took about 2-3 weeks, but intent was 72 hours after application. And it was supposed to be $10,000 forgivable and just a quick infusion of cash into your business. So when all this first came out, everyone applied for that. Most people, I hope, applied for that if you were listening to our webinars. But now that they've received it, how does that impact if they also receive PPP funding? How do the two work together? And I don't know if you know that answer or not.
Yeah, so if you receive, and if we're only talking about the 10,000 too, yes. So let's make sure we're on that point.
Sure.
Because you can apply for an EIDL loan in addition to the $10,000 now that funding is again available. But with respect to the 10,000, the concept there is that will then reduce the loan for which you're eligible through PPP. So if you would have been eligible for, say, a $100,000 loan through the PPP program, you would then only receive $90,000 through the program. That first $10,000 then serving to reduce that amount. The concept is that yes, that $10,000 is immediately forgivable. So you don't have to worry about submitting anything in order to ensure that you qualify for that purpose, whereas the remaining 90 that I'm talking about in my example, that you do have to submit for loan forgiveness. So the first 10,000 would be immediately forgivable. In theory, the concept there is that those funds that are forgivable are considered taxable as income. The PPP program has different treatment with respect to the forgiveness of those funds. So a little bit different concept, but it does play directly into the Paycheck Protection Program in that it reduces the amount of loan for which you're eligible.
Yeah, and just for my own clarity on that, because we first started talking about eligible loan amount, and then we talked about eligible forgiveness amount. Just for clarity, regardless of what your eligible loan amount was, so you were funded X amount of dollars, we're just talking about the forgiveness. So if you actually have $100,000 worth of forgivable money as part of the PPP program, what you would actually be forgiven then is $90,000 because you already received the $10,000 cash from the EIDL program, correct?
Correct.
Yeah. Okay. Yeah. All right. Wonderful. So what if you applied for EIDL and you received $200,000 of the EIDL money and you received PPP money? What does that look like for people?
Okay, so again, there could be the $10,000 portion, or there doesn't have to be. You can apply for the EIDL without applying for that immediate $10,000 infusion. So it's possible that that portion that you received from the EIDL did not come in the form of the first 10 was immediately paid out and then the remainder. So let's just go down that road for a moment. So I think the example you gave was 200,000. So that 200,000 is not forgivable. It is in the form of a loan, so it does need to be paid back, and it's at a 3 3/4 rate of interest. 3 3/4 is the amount for normal businesses. Nonprofits can actually receive those funds at 2 3/4% annualized interest.
Gotcha.
It does not affect your ability to take out PPP funds, so you could still do PPP funding, and those don't have to interplay as long as you don't have that $10,000 figure that we're talking.
Yeah, because both are completely independent of each other. The only time the two commingle, let's say, is just that $10,000 piece. But ultimately, what it comes down to, one way or another, you're getting that $10,000. It's either with EIDL or it's either with PPP.
Yeah.
All right. So,
hey, Cohen, let me make one other clear distinction. The
please.
PPP loan are being administered on behalf of the SBA through the banking system. The EIDL is direct, whether it's the advance or one of the loans, it's direct with the SBA. So you would apply and go direct with the SBA for the EIDL. You go through your bank or your qualified financial institution for your PPP.
Yep, exactly. Both are SBA programs when it comes down to it. They're just facilitated or administrated differently.
Well, they're accessed differently. You access PPP through your bank.
Yep.
You access the EIDL directly by an online application of the SBA.
So no matter what, if you received PPP money, which is the payroll protection program, part of the $2.2 trillion stimulus package. So whether you received PPP money or you applied for the SBA's EIDL program, you need to be talking with your accountant and your financial institution about, I received this money. How is it that I go about applying that money towards expenses? So I'm highly encouraging you to seek the advice of your accountant, seek the advice of your banker for those. We are here just to inform, share with you what we're seeing out there, give you some more insight that will hopefully help you make better decisions. But ultimately, please see your CPA and please see your banker for that. So maybe we should move into forgiveness. That's the question that I get all the time right now. Again, with the EIDL, if you received EIDL money, the $10,000, if that's part of what you applied for, when that $10,000 hits your bank account, it is completely forgivable. It's your money, done. If you borrowed more than the $10,000, then you'll have, it's considered a regular loan and it's a liability that you will have to pay back over time. But the PPP program is a little different. And I think most of us know this at this point, but I did want to rehash it because there are people that are just applying for the first time today. The PPP program, ultimately what it is you apply through your financial institution, who is an authorized SBA 7A lender, but you apply through your financial institution and you apply for 2.5 times your payroll. So what that means is it can be the last 4 quarters, it can be 2019. If you took your entire, let's just say 2019 payroll, divided it by 12, multiply that number by 2.5. And that's what you can submit to your financial institution for PPP funding. Your financial institution will take that dollar amount, request with the SBA. SBA will give the approval number. Your financial institution then will place those dollars into your bank account for 2.5 times your 2019 monthly payroll. So now you've received the money. So talking to a bunch of people in DeKalb County, there's quite a few organizations that have actually received PPP at this point, which is great to hear. The money's in their account, they're able to pay their staff, they're able to maintain operations, but I'd like to discuss now about, okay, so the forgiveness piece. And Mark, I'll kind of start with you. My understanding is the forgiveness piece is the day the dollars hit your account, this is what I just read in the SBA thing, I think, but the day the dollars hit your account, a timer starts. And that timer is from when they hit your account for 8 weeks after that. What is forgivable in that 8-week period? And what does forgiveness actually mean on the total loan amount?
So what's forgivable, that goes back to the concept of payroll cost. And when we talk about payroll cost is, let's just use the term gross wages. So the amount that you paid out in gross wages to your employees, that's considered a payroll cost. So we don't want to get too much in the weeds with respect to how much they received in their net paycheck. Look at the gross wages that you paid to your employees. That is a component of payroll cost that's acceptable as a forgivable amount. In addition to that, if you pay anything towards group health insurance or any other group insurance on behalf of your employees, those are eligible to be forgiven as well. The amount that you pay for state unemployment towards your gross payroll, that also is considered to be a forgivable payroll cost. And then in addition to that, retirement benefits. So anything that you pay on behalf of your employees, all of those amounts are considered valid payroll costs that you are eligible to to take and have forgiven. The concept there is the forgivable amount needs to be 75% in the form of payroll cost. You can have an additional up to 25% in the form of other expenses. Those other expenses would be considered rent expenses. Those would be mortgage interest. And keep in mind, when I say mortgage interest, I mean not only mortgage interest on a property, on real estate that you're renting, but also an equipment that you're utilizing in your operations.
Because that's property too.
Yeah, exactly. But that's considered personal property, and that's also valid. But it's only the interest portion that you're paying on those notes. Yeah.
What about if I had a line of credit and I was paying interest on that? Can I apply that or no?
The line of credit would not be considered a valid expenditure because there's no property affixed to it. If it was mortgaged against property, then it could be considered valid. But if it's just a line of credit against your general operations, then the answer to that is no.
Okay.
In addition to that, then also utility costs, and utility costs do include telephone and do include internet as well. There's a weird, quirky provision that allows for transportation. I'm not quite sure I understand what that even is. Transportation as a utility, but that is valid if you could figure out how to utilize it.
So water, garbage, sewer, electricity, NICOR gas, all that.
Absolutely.
But a maximum of 25%, correct?
Yeah, that's correct.
So if I, in that 8-week period, if I dumped all my expenses into it, let's just say it's 100,000. For some reason, we're dealing with really big numbers, and I know that's not the case for most people. It just seems like easy math right now. Yep. But if it was $100,000 and I had $76,000 worth of payroll expenses, and I had $30,000 worth of utilities and stuff, ultimately I could only deduct $24,000 worth of utilities. Would that be correct?
Yeah.
Yeah, and I know there's nuances here. Yep.
Yeah, you're not going to have more. Well, I stand corrected. I'm going to take this back for a second because, Colin, you are actually able to write off the interest as well. The interest can be forgiven. So in your example, if you're loaned $100,000, you would have an interest component that would be in addition to the $100,000. And if you have valid expenses, you could actually write off you can have forgiven not only the $100,000, but in addition, the interest that would have accrued on that in that time.
So that's what's going to be really important for everyone on this. In future webinars with Frank and Mark, we're really going to get in the weeds on this when we learn more from the SBA on exactly the forgiveness piece, exactly the calculations, and I would anticipate maybe there'll be calculators or a spreadsheet or something we'll be able to utilize to be able to help out with that. But Frank, I don't know if you had any comments on what we just discussed, or did we cover it all?
No, you covered it all. Just a little bit of clarification. Mark did a great job, again, outlining it. Just remember, gross wages up to $100,000 per employee. You cannot include anything over 100 gross wages. Number two, what I tell people, simple math. If your average monthly payroll is $10,000 times 2.5 gets you to $25,000. 18.7 has to be used for payroll. And then probably the biggest issue is there's not more to come. There's a lot more to come from the SBA about the forgiveness piece.
Yeah.
Because as they get into this, they're getting more questions for clarification. They're getting more questions that I don't think they really thought about. I know that a lot of people have been talking that in some parts of the country, if you're getting, if you're getting paid $10 an hour at your job, but you're getting 13 for unemployment, people aren't coming back. So there's a lot more to come on that than what I've heard is by May 1st, which would be the end of this week, probably first part of next week. The SBA is supposed to come out with their first guidance for the forgiveness piece. So this will definitely evolve. And I know, Cohen, you want to get in the weeds, but we got to know what weeds we're in before we can get in them. And right now we don't.
What was that date you just said that the SBA is going to come out with more?
SBA is going to come out with more, much more guidance on the forgiveness piece for banks and borrowers over the coming weeks.
Okay.
My understanding is that by May 1st, they should have their first run at publishing more information on the forgiveness piece.
Okay. We got a question from Phil here, which is great. Mark, I know this is going to be right up your alley for a minute. Accrual versus cash-based accounting. So many businesses run on accrual-based accounting. If you don't know what it is, chances are you're on cash-based. But this would be another thing that you ask your accountant how you actually handle it. But that 8 weeks worth of expenses, and Frank, maybe this is up your alley. I'm not sure which. I'm guessing Mark, but is it accrual based, that 8 week period, or is it when you actually cut the check for that particular bill?
So we're advising our clients to be looking at everything on a cash basis with respect to this. And the main reason for that is because it's very difficult to demonstrate if something was accrued, especially with respect to payroll. In order to demonstrate that you actually had some sort of a payroll cost that was incurred, the best way to do so is to pay it. It's to actually pay that employee, and you can demonstrate that yes, in fact, this amount was paid, and that's a valid expenditure for payroll costs. And that is what we've been advised by experts that we're relying on as well, with respect to how to appropriate those funds. It's done on a cash basis.
So you've been my accountant for years, and you know I like to keep things as simple as possible. So in my eyes, right, that means the day the PPP money hit my account, whenever I make payroll, obviously that's a cash transaction. But the utility bills that are coming in, the rents that's coming in, during that 8 week period from when the money hit my account, I need to be making sure that when I pay rent for those 2 months, let's say, that it's happening within that 8 week period. When I pay my utility bills, it's happening in that 8 week period when the check is actually, I'm licking the stamp and I'm licking the envelope and I'm putting it in the mail. Is that correct?
That's correct.
Okay. So then what a lot of us have to realize then is, 8 weeks is not 2 months. So if you always pay your rent on the first of the month, you potentially, by doing it that way, could have one of your entire rents not part of what you could apply for forgiveness for with the PPP program, because you've gone beyond 8 weeks at that point. So in this case, you want to pay your rent, and then you might want to pay your rent a little bit early to squeak in under that 8 week guideline. Would that be accurate?
Yeah.
Okay. All right. Frank, any elaboration on that, or what you bankers have been talking about?
No, I agree with Mark. I think it's an open question. Yep. Subject to interpretation. That's just my personal opinion. And so when you have something like that, you gotta default to what you know is pretty darn safe, and the cash payments are first on where I'd land.
Yeah. And we were having a whole conversation right before we actually went live with this webinar, which I'm not going to get into, guys, so don't worry. But what it comes down to is I'm about as cynical as you can be out there with programs like this with the government. But what I am reading over and over and over again, right, is the spirit of this whole entire thing is to keep businesses afloat and to keep people from going on unemployment. So we kind of get in the weeds, especially it seems like I drive us there, looking for all the dotting my I's and crossing my T's. But ultimately what it comes down to is the intent is to keep people off unemployment. So if you were a business that received PPP money and you kept your people employed, and all your expenses are valid expenses during that time, I would think, and I'm not promising anything at all, but I would think you have met the spirit of the stimulus package, and most likely there's a high probability, I know Frank and Mark are like, don't say it, Cohen, but there's a high probability that it'll be forgiven. Because if not, think of the ramifications of that. Think of every politician out there that approved this thing, and if it turns out small businesses across this country are not getting their PPP money forgiven, that's a huge impact, right? And that is in complete contrast to the spirit of this thing. The reason why I'm sharing that is to the other small businesses out there, man, I feel you, and the angst is high. We just want to know. I want to know before I spend that money that I'm going to be forgiven. But we're not going to know right now. To Frank's point, it could be weeks before the SBA gives us more clarity on exactly what is or is not going to be forgiven. So until then, we have to make decisions now with the money that we received. I personally am going to make decisions based off the spirit of the stimulus money, that money, if used for valid expenses, is going to be forgiven. Frank, I don't know if you would comment on that, or if I'm crazy, or any thoughts on what I just said.
No, I don't have any additional comments.
Doesn't want to go on record. I don't blame you.
No, I understand your position, but I also understand that, as I've said several times, there's just so much more to come.
Yep.
And I agree with you as it relates to the spirit of the spirit and the intent of this program. But I can't opine about anything until I know what the rules are. Right now,
Yep.
we have the rules of the program. What we're waiting for is the details of the forgiveness piece.
And that completely makes sense in your role as a lender, and Mark, I understand your role as a CPA. I have a little more freedom to, I think, make statements like that because I'm the guy on the other side of it all. But Mark, is there anything you wanted to talk about on what I just said, or are you good?
So what I will say, and this is a little bit of what we had talked about, but what I will say is we are advising our clients to look to hit that 75% mark. And when I say the 75% mark, I mean look to hit the 75% of whatever your loan is, as far as what you're paying out in valid payroll costs. That's something that is being looked at, and there's discussion with respect to it. So my advice is be better safe than sorry. Do what you can to hit that 75% of your loan amount in valid payroll costs.
Yeah, and
more
Mark,
information be coming later, but that's what we're advising our clients at this point.
And I'm going to charge you to keep that top of the discussion in the webinars going forward, just to make sure that we don't lose sight of that one. Frank, I got one for you directly, and this is a valid one. Some of the, we'll call it larger small businesses that applied for PPP or maybe applied for the EIDL. What if their application was over the FDIC maximum amount insured by the bank? How do they make sure that the money that they received is actually secured with our financial institutions? Let's just say it's, if I recall, FDIC insures up to $250,000. Is that correct?
Yes.
Okay, so what if it's $300,000 or $500,000? What do they do?
Well, that's a great question. I'll be very honest with you. I've never even thought of that. But I can also tell you that if you're worried about that, based on the short period of time you have to spend this money over an 8-week period, yeah, I guess that's an ancillary question.
So I would think they could reach out to their financial institution, find out specifically how it works. If it's, you have to have it in multiple accounts, or maybe they keep $250,000 with one bank and the remainder with another bank. So Phil, I would definitely reach out to your financial institution. I've got Lauren on here asking how many of bulk loans have been granted in, oh, Mark, go ahead, sorry.
I was just going to ask Frank, is your bank associated with the CEDARS program?
Yes.
Okay. So are you familiar with, can you explain that a little bit just so that anyone listening understands what CEDARS even is?
You know, that's probably a next week call.
Okay.
Only because I think the CEDARS program, at a very high level, it's a sharing program in which, so if someone has $1 million in deposit at the bank and he says, you know what, I want to spread my risk, there's a system within the banking industry, there's a company that actually acts as a more or less of a broker to move money from one institution to another. So it's quote unquote in the name of another bank, and therefore it gives you, you know, 4 $250,000 deposits at 4 different institutions, so you're covered. And it's more of a paper entry. There's a way to do that. There's a cost for you to incur that, but it certainly is something that's available. And if anybody wants more detail on it, you know, they can reach out and we can put them in with our treasury people, and they can explain the program in greater detail. But it is a way to very easily spread your deposits across a broader footprint to get all the FDIC insurance you want. But again, there's a cost to that.
Thanks, Frank.
We've got a few questions coming in here. I'm going to keep them all anonymous so far. So one is, I've had someone question me. They are a very small business and does not always take a paycheck. How does that work with the PPP? So Mark, you want to break down if you're, I assume this is like a sole proprietorship or something to that effect, that they're not taking a W-2 paycheck. How does the PPP program work for someone like that?
Okay, I can answer that. If what we're referring to is a sole proprietor or self-employed individual, I can answer that. If we're talking about somebody that is, let's say, an S Corp and they're supposed to be taking a payroll and they're not, then they're not going to qualify for the loan forgiveness. But to the point of self-employed or sole proprietor, the concept there actually is a lot more straightforward than it could have seemed in the past. Basically, they put out some additional information indicating your loan amount. If you're self-employed, your loan amount is actually based on your net income. And I know we had talked about that previously in previous webinars, but for the sake of discussion, if your income, net income from that business, you take that, you divide it by 12, you multiply by 2.5. Okay, so that's the amount of eligible loan that you're going to be afforded. All they're going to do is take that very same number from 2019, your income from 2019, if they're using that as your loan amount that you're calculating it from. They're just going to use that very same amount. They're going to divide by 52 and multiply by 8. That's the forgivable portion. So it's real easy. You don't have to worry about what happens in 2020. It's strictly based on 2019. So the calculation, you should actually know your calculation. Just basically look at what your net income was. That's what they're basing your loan amount on. And now you take that same number, divide by 52, multiply by 8. That's your loan forgiveness.
That's great. All right, so yeah, they're still eligible and can still get assistance here. So definitely apply. We've got another one. Lauren wanted to know how many of both loans have been granted in DeKalb. We don't know that data, Lauren, but it seems like quite a few at this point. The people we were talking to early on that were having all the questions about the PPP program, then they had all kinds of questions about, I've got an SBA number, but I don't have the money. And then it turned into, I've got the money, what do I do now? So it seems like more and more have actually gotten approved. So there's been quite a few. And I don't think, Frank, you either know or would be able to share First National's numbers on something like that. But ultimately, it seems like, Lauren, it's been quite a few that have been out there. I've got a question here too that's multi-part, but we kind of talked about it, and we don't need to go into a lot of detail, but we talked about it when we had the IDES group on, and then also I believe when we had some of the small businesses on. And this one is, I've got an employee that wants to collect unemployment, right? She makes $16 an hour. How do you handle a scenario like that? And the problem we're hearing more and more out there is, depending on the employee's wage when all this crisis happened, right now, if they apply for unemployment, and do not quote me on this, I'm just sharing information that I got from IDES, and I'm dealing in general numbers. But let's say their paycheck that they had over the course of 2019, if they file for unemployment, they're going to get 50% of that. So that doesn't seem like a lot of money, and it's not. It's just there to help, barely get by. But right now, as part of the stimulus program, anyone that was either on unemployment or had applied for unemployment once the crisis hit, they get an automatic bump of $600 per week. So that's $2,400 on top of the 50% of their wages that they were getting already on unemployment. That total dollar amount has caused some businesses to struggle getting people to get off unemployment and come back to the workforce. And the person asking this question, I feel for you, because there's some small businesses out there that are really challenged right now that they could, if someone on unemployment requests unemployment and they were offered work and turned it down, they're automatically refused unemployment at that point. So it's putting a lot of small business owners in a really tough spot, that you want to keep people employed, you receive the PPP money in order to employ them, but if they go off unemployment, they might actually make less than they were on unemployment. So I keep wanting to say the person's name, but I'll just say that it's a tough question. You can definitely reach out to me personally. I'll share more of what I have about it, but as well as Jock Somies with the SBDC, his contact information. I believe Courtney is on our website, and if not, you can reach out to me again. through DeKalbCountyUnites.com, and I'll put two of you in contact. But it's a tough one. Ultimately, what it is if you receive PPP money, it's there to keep your people employed. If your people go on unemployment and you're offering them a job back, it gets into a really tricky area of how that actually plays out. So we can't give you any advice on that one whatsoever. Just sharing with you what we've heard and what we've seen and what we know. I don't know, Mark, if you've got any, or Frank, if you've got any further thoughts on that. Yeah.
No, it's a struggle for, we have several clients that have that issue.
Yep.
So Mark, there's another one, I think,
yeah.
probably for you, from Diane. Said, we received the PPP based on 4 employees and one of our employees quit. And I'm not sure that we will rehire within the 8 weeks at the same wage. What will happen to our possible forgiveness? Would we just have to give that much back that was forgiven instead of it being forgiven? Sorry.
Yeah, so basically, I guess, let's talk high level conceptual, concepts here. So high level is basically, you're not paying that person. So if you're not paying that person, you're not incurring payroll costs. Therefore, you don't have a valid cost to have forgiven. So yeah, that would be true. Do keep in mind as well that there is an element to the loan forgiveness that relates to headcount. And as Frank said, we're still waiting on further information. But as I understand it, if we had 4 employees and we lost 1 employee, well, now we only have a 75% headcount of what we had originally. So that could certainly affect the amount of loan forgiveness for which you are eligible.
You're right. There is and they've said it, we don't have complete clarity, but there is a 1-to-1 there on employee headcount. So if you went into this thing with 20 and you come out of this thing with 15, you're going to be penalized for that 5 reduction in headcount, regardless if they just stay the same. So there's multiple factors that are going to come down to this. Again, the spirit is the thing is, you went into this with 20, you came out with 20, and that's how they're going to calculate the forgiveness piece. The whole point is to keep everyone employed. But it's going to get a little sticky for those of us that may not have kept the same amount of employees, or those of us that may have reduced wages overall, and more of that's to come in the coming weeks, correct?
Yep.
Yep. Okay. All right, let's see.
Becky Beck has a question there. If our PPP was submitted and an application verification on file, then the money ran out. Now that they are refunded, do I just sit tight and wait, or do I need to rattle the cage of my bank? Frank will tell you, don't rattle the cage of your bank.
What do you think, Frank?
Can you repeat that question?
So it sounds like they submitted their application for the PPP and they got a verification, but then the money ran out. So do they just sit tight now, or do they need to reapply? What position should they be in?
Well, my understanding is if they applied to the bank and they got an SBA number, then they were going to get funded. So if they got an SBA number, they will get funded. If they don't have an SBA number, then they won't, because they stopped taking applications, I don't know, a week ago, whatever, Thursday morning at 9:15, a week ago. And so I would definitely reach out to the bank, because I think I appreciate the question, great question. But if they got an SBA number, they will get their money. Now, if they don't have an SBA number, then make sure that they're queued up with their bank, that as soon as this thing gets working again, they can push it on to SBA and get their number right away.
And Becky, I know you. You're a wonderful lady, but you're talking about your livelihood and you're talking about your employees' livelihood. There is no rattling the cages here, right? This is about sustaining. So if you feel like you want to pick up the phone and call your banker and hound them, or call your accountant or whoever, you need to do that. This is bigger than being an annoyance to someone. You need answers. You need to know, so you can keep people and paychecks flowing and meals on table and mortgages being paid, all that kind of thing. So I wouldn't begrudge you a bit by rattling a cage or two to get the answers that you need.
Yeah, and Cohen, let me add on to that, if I may, real quickly. And again, this is just my personal opinion. I totally agree with that. This is a livelihood of so many important people and businesses in every community in our country. And early on, I've talked a lot about context. It's important to keep in mind the context of what is being asked here to be done in an extremely short period of time. So I think an understanding of the context is appropriate, but certainly reaching out to your banker and asking them for a status update on a frequent basis, maybe daily, would not be inappropriate.
Okay. I've got one here for you, Mark, from Ed. Mark, should you write a payroll unscheduled 56 days after you receive the PPP dollars?
Well, that is a good question. I think ultimately concept there, and if I'm sure I'm understanding you, basically I think what it sounds like is you're saying, okay, I pay every 2 weeks, and if I would pay out every 2 weeks, that last payroll should actually be on the 63rd day. But there's that period in between. My answer, yeah, right. So you should, yeah. If you're asking, should you pay a short week? My answer is yeah. That would demonstrate that you incurred and actually paid that payroll during that 8-week window. So, what's up?
I was just say, Ed, thank you for that question, because then personally, yeah, I pay twice a month.
Right. Oh, yeah.
So
right.
I'm only going to have 3 paychecks in that 2-month period, which is 3 paychecks in 4 or in 8 weeks. So you're saying I might want to do an advanced payroll, yeah, to get in that 8 weeks. Ed, wow, thank you. It's amazing how I'm in the weeds on this thing, and I didn't put that math together. So that was great on my end. So yeah, any of us out there paying twice a month, you realize that's longer than 8 weeks, so you need to be really cognizant of that. Like Mark was saying earlier, the forgiveness piece is when check is cut for eligible expenses. So yeah, that was great. All right, we have one from Brian. I have to fill that job with a contract. I think I'm missing some inside conversation. Yeah, the first question is, should we cut an additional payroll for scenarios like this? I'm not sure what that's tied to. And then I have to fill a job with a contractor. Oh, if an employee quit and I have to fill the job with a contractor, my understanding, Mark, is yeah, the money for the contractor does not qualify as a forgivable expense.
Nope.
Yep. All right. Boy, I know we've gone quite a ways here. Any final thoughts, Frank? I don't know, any wisdom that you've learned over the course of the week that you want to share? Mark, same question to you before we wrap up things here for everybody.
Frank first.
Frank. I might have lost him. Frank, you there? Oh, we lost him.
Can you hear me?
Oh, yep, got you.
Nope. Oh, sorry.
No worries.
If people are interested in volumes, where'd it go? Oh no, there it is. If people are interested in volumes, you can actually go to the website. There's a, I think it's called Paycheck Protection Program Report through April 16th. It's just 6 pages, but it is interesting. In this, it doesn't break it down into county or anything like that. But in the state of Illinois, there's, and these are rounded numbers, it looks like $16 billion of approved PPP money, which, if I remember correctly, is like 8th or 9th biggest in the country. So if you're interested in the data, you can go out onto the SBA website and look at, I think it's called status report, and we're already to the 27th, so it certainly is dated, but I guess it would have been inaccurate at the time it closed up. But anyway, it's out there.
Mm-hmm. Mark,
or whoever asked that question.
Any final thoughts, Mark?
Yeah, I'm going to bang the drum that I bang every week, and that is basically if you did in fact receive funds from the payroll protection program, I want you starting to calculate. I want you looking at and doing projections for determining how much of that loan you believe is going to be forgiven. I want you knowing that information up front. I was telling Cohen a little sidebar before the webinar. You know, the loan is afforded based on 12 months, right? So you take your annual payroll, you divide it by 12, and you multiply by 2.5. Okay. Well, The calculation is different for the loan forgiveness. That's based on weeks paid. And if you actually really look at it, and for the sake of discussion, if you had the same payroll, the same people working for you and making the exact same amount that they did the whole prior year, and you paid that out over an 8-week period, you would reach 73.8% of the payroll, not 75. You would meet 73.8%. So please take the time, know your numbers, and understand. If you're trying to hit those figures, you want to take the time to do those calculations and know it up front. That's my advice for you.
Awesome. All right, as usual, I appreciate you guys, but in particular, I forgot to introduce Courtney Strohacker, my right-hand woman through all these webinars. She is the Executive Director of the DeKalb County Convention and Visitors Bureau. Thanks for all your help, Courtney. I absolutely appreciate it. You make this look easy. I want to thank Mark Kerman with Siepert and Company, local CPA firm, and Frank Roberts with the First National Bank of Omaha. We've been doing this webinar series every single week because there's just so much to cover. We'll be continuing this webinar series. So these two, the dynamic duo, will be back next Monday. I'm speaking on behalf of you guys. We'll be back next Monday. As more of this PPP and EIDL starts to evolve or unfold, we're going to be here to give you firsthand information from the accountants and from the lending institutions about what they're seeing and what knowledge they have. So please go ahead and tune in. Don't forget, go to DeKalbCountyUnites.com and you can see our future webinars every Monday, Wednesday, and Friday at 2 p.m. I'm telling you, we have had some incredible speakers come in and share a wide variety of information that all apply directly to small businesses in the area and how we can maximize programs that are out there. And then sometimes just about strategies and tips to maximize as much as we can the COVID-19 crisis and shelter in place. So with that, I look forward to seeing you all here again Wednesday. Thanks again for my panelists. And as always, everyone stay healthy and I'll see you next time. Thanks, guys.